From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 22nd, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Now I think there's two trends that we really want to focus in on here for the New Zealand dollar daily time frame. First is the red trend line, the fall off that we had after the blue trend line, significant rally. We had the red trend line where we had a significant pullback about halfway of the blue trend. We had a pullback about halfway. Now the black trend where we've seen the market on a rise over the past couple of weeks about halfway of the red trend. So the question is, are we going to see the black trend line and the buyers take back control above the 100 period moving average and drive this to a new high above the red trend line high? Or are we going to see it turn back down under the black trend line and retrace this blue trend line a little bit more? Those are some of the questions that we have to think about as we're looking for new opportunities. If I take another trend line here, let's put it just at the top here. And so we can see we're in somewhat of a rising channel here where the market is taking a little bit of a rally. We've seen it bouncing around here, falling, rising, even a couple of days rising just above the channel in just above the blue trend, the blue shaded area here where we see some Fibonacci overlapping of some historical trend ranges. Fibonacci overlapping of the blue zone found resistance and it fell back down under the pink zone. So we look along the pink shaded area, 73.25, 73.50, we can see historical resistance, not only within the channel, but you see the black circle here, several days finding resistance, the blue circle, about 4 or 5 days finding resistance and then broke out above and made a new high, and then just before that, the black circle resistance. So we know that even within the rising channel here that we have, we're right about the middle of that channel, right into the pink zone, about the middle. So even if we were going to trade within the black channel, we're still looking at the blue zone as your major resistance and the orange zone as your major support. But that pink zone in the middle, let's go ahead and zoom it in on this a little bit more. This pink zone in the middle ends up being somewhat of a hinge point. As long as it's underneath that pink shaded area, we might look for it, just like it did back here on the left-hand side of the chart, find resistance and fall back down to the orange zone. And the risk here is that it breaks back above the pink zone because we already know what's going to happen. It's going to go likely to the blue shaded area. So with the price action that we've seen over the past few days, the rally all the way to the green zone and then sudden infusion of sell orders and the fall back off. Yesterday, falling back below 73.50, 73.25, and now holding underneath it. We're looking at resistance once again into the pink shade area. As long as it stays underneath here, we're looking for resistance for the day today and a fall back down to the orange zone. Of course, the risk is pretty easy to see, that we just don't want it to get back above because it looks to go higher again for the New Zealand dollar. 4-hour time frame, not really going to change that much. Again, we saw the market rally a couple of days ago, fall significantly, and now holding again underneath that pink zone. Even here on the 4-hour time frame, take a look at all these areas where it found resistance here where the black X is. We see resistance here, or just shy of it. We see resistance back here. So these times on the left-hand side, resistance, 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 a spike above it, a new high, and now we're back underneath it. So for me, it just, as long as it stays underneath that pink zone, there's no real reason to go long and buy. The only real reason to go long and buy would have been back down here at the orange shade area. As long as it's underneath here, I believe there's an intraday opportunity for us to take a short, target the orange zone, and if it can turn back lower again, back underneath the orange zone 72.60, we'll have an opportunity to see some more profit all the way down towards the 7,200 level for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.